What if you could build a portfolio so powerful you'd never have to work again? Not because you hit the lottery, not because you grind yourself into the ground, but because your money is working harder than you ever could. Most people spend their lives chasing paychecks. They trade time for money, always relying on a job, a boss, or the next client. But the wealthy? They think differently. They don't just earn, they own. They collect assets that grow in value and pay them month after month, whether they're working or not. My name is Fahad, and for the past 10 years I've been working as a business consultant, helping companies grow faster and work smarter. And here's something I've learned along the way. The wealthiest people aren't the ones grinding 24/7. They're the ones who build or acquire assets that work for them, even while they sleep. In this video, I'm going to share the 8 types of assets that can create lasting wealth and give you the freedom to step away from constant work. These are the assets that make people rich and, in many cases, allow them to never work again. That's the key difference. A paycheck stops the moment you stop showing up. Assets keep paying you forever. That's why the wealthy can take long vacations, retire early, or walk away from work completely. Their portfolio does the heavy lifting. And here's the best part. You don't need millions to get started. Many of these assets are accessible to everyday people right now. With the right plan, you can start small, build piece by piece, and over time create streams of income that cover your lifestyle and make work optional. Make sure you stick around, because asset number 7 is the most overlooked of them all, yet it has created more millionaires than almost anything else. Let's get into it. The first wealth-building asset is one of the most reliable, dividend-paying stocks. Wealthy people love assets that don't just sit there, but actually pay them regularly. Dividend stocks are shares in established companies that reward you with cash payouts just for holding the stock. It's like owning a little slice of a business, and that business thanks you by sending you a check every quarter. Here's a simple example. Let's say you build a portfolio of strong dividend companies that yields about 4% a year. If you had $500,000 invested, that portfolio would pay you around $20,000 every single year without selling a single share. That's true passive income, and the payments often grow over time as companies increase their dividends. Now, most people hear that and think, well, I don't have $500,000 lying around. But here's the trick. You don't need to start big. The real secret with dividend investing is to start early and reinvest your dividends. When you take the payouts and buy more shares, you trigger the magic of compound growth. For example, even if you just invest $100 a month into dividend-paying ETFs or individual stocks, over years and decades those small contributions snowball. Reinvested dividends keep buying you more shares, which then pay even more dividends, and the cycle repeats. That's how ordinary people quietly build 6-figure portfolios over time. Dividend-paying stocks are a cornerstone of financial independence because they provide 2 things: steady income today and long-term growth for tomorrow. That's why wealthy people love them and why they should be on your radar too. The second wealth-building asset is perfect if you like the idea of real estate but don't want the headaches of being a landlord: real estate investment trusts or REITs. REITs are companies that own and operate income-producing properties, things like apartment complexes, office buildings, shopping malls, data centers, and even hospitals. When you buy shares in a REIT, you're essentially buying a slice of those properties. The best part? You never deal with tenants, maintenance calls, or fixing leaky toilets. The company manages all of that while you collect your share of the profits. By law, REITs are required to pay out at least 90% of their taxable income as dividends. That's why their yields are often much higher than regular stocks, typically between 3% and 8% annually. So not only do you get exposure to real estate, but you also get a steady stream of income. Here's a simple example. Let's say you build up a REIT portfolio worth $100,000. If it pays a 6% dividend yield, that's $6,000 a year in cash flow, completely hands-off. And unlike buying a rental property, you don't need tens of thousands for a down payment. Many REITs and REIT-focused ETFs let you start with as little as $100. That makes REITs one of the most accessible ways to add real estate to your portfolio. You're diversifying into property, collecting consistent income, and you can buy or sell your shares with a single click, no real estate agents or loan paperwork required. This is why wealthy investors love them. You get the benefits of being in real estate without the grind of being a landlord. The third wealth-building asset is one of the oldest and most proven paths to financial independence: rental real estate. Here's how it works. You buy a property, rent it out, and your tenants essentially cover the mortgage for you. Every month they're paying down your loan while you keep the cash flow and the property itself. It's one of the only investments where someone else literally pays to build your wealth. For example, imagine buying a $200,000 rental property with a $40,000 down payment. After mortgage payments, taxes, and maintenance, you might still clear around $600 a month in profit. That's over $7,000 a year from just one property. And that doesn't even include the tax benefits, which can make the numbers even sweeter. Now here's where it gets exciting. Real estate scales beautifully. Once you have the first property running smoothly, you can reinvest the profits into a second, then a third. With just a handful of rentals, it's realistic to bring in $3,000 to $5,000 a month in passive income. That's enough to cover living expenses for many people, and it continues to grow as you add more units. And remember, cash flow is only half the story. Real estate tends to appreciate over time. So while you're collecting rent every month, your property value is usually climbing in the background. That means you're not just earning income, you're also building long-term equity while you sleep. That's why rental real estate has created more millionaires than almost any other asset. It combines steady income, leverage, and appreciation in a way few other investments can match. Asset 4. Index funds. If you want to get rich the truly lazy way, there's no better option than index funds. Here's why. When you buy an index fund, you're not betting on one company. You're buying a tiny slice of hundreds of the world's biggest businesses all at once. For example, an S&P 500 index fund gives you ownership in giants like Apple, Microsoft, Amazon, and Coca-Cola, all with a single purchase. That means instant diversification, with zero stock picking stress. And the results speak for themselves. Historically, the S&P 500 has returned about 10% per year on average. That might not sound flashy compared to risky bets, but over time, compounding turns those steady returns into serious wealth. Here's a powerful example. Let's say you invest $500 a month into an index fund. After 30 years, with average returns, you'd be sitting on a portfolio worth over $1 million. That's a millionaire lifestyle built on a simple, automated plan. No trading, no market timing, no gambling. And when you're ready to live off that portfolio, you can follow the classic 4% rule. That means withdrawing about 4% of your balance each year without running out of money. On a $1 million portfolio, that's roughly $40,000 a year of passive income for life. Combine that with Social Security, rental income, or other streams, and you're completely free from ever needing a paycheck again. Index funds are the ultimate set-it-and-forget-it asset. Wealthy people love them because they quietly grow in the background while you focus on living your life. The fifth wealth-building asset is the one that has created more millionaires than almost anything else: owning a business. Nothing compares to the wealth-building power of business ownership. Unlike a job, where your income is capped by your salary, a business allows you to scale infinitely. You're not just trading time for money, you're building a system that can generate cash flow around the clock. Now, a lot of people think owning a business means endless stress and 80-hour work weeks. But the real trick is to build systems so the business runs without you. Wealthy people don't just own businesses, they own businesses that are systemized, automated, or managed by teams. That's what makes the income truly passive. This can take many forms. You could buy a local laundromat, set up an online store using dropshipping or digital products, or invest in a proven franchise model. The upfront work is in setting up operations, but once it's running smoothly, you can step back and let the machine run. Here's why this is so powerful. Even a modest business generating $50,000 a year in profit can become a massive wealth engine. That same business could be valued at $500,000 or more if you decide to sell it, thanks to business valuation multiples. So you're not only earning cash flow now, you're also building a valuable asset you can cash out later. That's why the wealthy love businesses. They provide immediate income, long-term appreciation, and the ability to multiply money over and over again. With the right systems, owning a business can truly set you free. The sixth wealth-building asset is all about stability and peace of mind: bonds and Treasury securities. Bonds are often called the sleep well at night asset, and for good reason. When you invest in a bond, you're essentially lending money to a government or a company. In return, they pay you regular interest, called the coupon, until the bond matures, at which point you get your principal back. It's predictable, low-risk income that doesn't require trading or guesswork. For example, U.S. Treasury securities currently yield around 4 to 5% annually. That means if you invest $100,000 in a Treasury bond, you could earn roughly $4,000 to $5,000 per year, almost guaranteed and with very low risk. Compare that to stocks or businesses, where income can fluctuate wildly, and you can see why the wealthy use bonds as a foundation of their portfolios. Bonds serve two key purposes in a portfolio. First, they provide guaranteed income that keeps cash flowing even during market downturns. Second, they offer stability. When stocks are volatile, bonds often act as a cushion, protecting your wealth from large swings. As investors get closer to retirement, bonds become especially valuable. They ensure that a portion of your portfolio generates reliable income without exposure to risk, giving you confidence that you won't have to sell stocks at the wrong time to cover expenses. The takeaway? Bonds might not make headlines like a hot tech stock, but they are an essential wealth-building tool. They complement higher growth assets by providing steady cash flow and preserving capital. For anyone aiming for financial freedom, having bonds as part of your asset mix helps ensure you can sleep peacefully while your money works for you. Now we're at asset number 7, and this one is the millionaire maker that most people completely overlook: intellectual property. Intellectual property, or IP, includes things like books, online courses, software, apps, music, and digital products. The key idea here is create once, get paid forever. Unlike a job or a service business, you're not trading time for money. You're creating something once and letting it generate income repeatedly. Take J.K. Rowling as a famous example. She wrote the Harry Potter books decades ago, but she still earns millions every year from royalties. That's the power of intellectual property. Your work keeps paying you long after the initial effort. You don't need to write a global bestseller to benefit from IP. Even a small online course, an ebook, or a simple software tool can bring in thousands of dollars each month. The trick is to focus on creating value that people want and packaging it in a way that's easy to sell repeatedly. Here's a simple starting point. Think about your expertise or experience. What problem can you solve for someone else? Package that knowledge into a digital guide, template, or mini course and sell it on autopilot. Platforms like Udemy, Gumroad, or even your own website make it easy to distribute and monetize your content. The beauty of intellectual property is that it scales infinitely. One digital product can serve hundreds or thousands of customers without extra work from you. And once you've built a few IP assets, your income starts to compound, just like with stocks or real estate, but with almost zero ongoing labor. This is why the wealthy love intellectual property. It's highly scalable, mostly hands-off, and can generate passive income for decades. Finally, let's talk about asset number 8, commodities and precious metals. These are the assets that often don't make headlines, but they play a crucial role in protecting and growing wealth, especially during periods of inflation or economic uncertainty. Think gold, silver, oil, and other raw materials. Gold, in particular, has been a store of value for centuries. Unlike paper money, which can lose purchasing power, gold has consistently preserved wealth across generations. During the 2008 financial crash, for example, gold rose about 25%, while the stock market was plunging. That's why savvy investors include a portion of commodities in their portfolio. It acts as a hedge against risk. The principle here is simple. A 5 to 10% allocation to commodities can safeguard your portfolio while still allowing you to participate in long-term growth. It's not about making huge gains every month. It's about stability and insurance against market volatility. You don't need to buy a vault full of gold bars to get started. There are multiple ways to invest. You can purchase physical coins or bullion, invest in commodity ETFs, or even buy stocks of companies tied to these resources. Each method gives you exposure to the asset without the logistical hassle of storing or managing it yourself. Commodities may not create the flashiest headlines, but they provide security, diversification, and long-term protection for your wealth. For anyone serious about building a portfolio that can last decades, ignoring commodities is a mistake. In short, while stocks, real estate, and businesses grow your wealth, commodities act as the safety net that preserves it when uncertainty hits. Now that we've covered the 8 key assets, let's put them together into a wealth-building blueprint the rich actually use. Phase 1 is simple. Start with index funds and dividend-paying stocks. These give you steady growth and reliable income, even with small contributions. They're the foundation of your portfolio, the base that grows while you sleep. Phase 2. As your capital grows, add real estate and REITs. Rental properties and REITs provide cash flow and equity growth, diversifying your income streams and letting you earn both monthly cash and long-term appreciation. Phase 3. Once your portfolio is solid, diversify further into business ownership, bonds, and commodities. Businesses and bonds provide higher returns and stability, while commodities act as a hedge against inflation and market volatility. All along, don't forget intellectual property. Books, courses, software, or digital products can generate unlimited upside without tying up more of your time. This is the secret multiplier that can accelerate your wealth faster than almost any other asset. The ultimate goal? Aim for $1 to $2 million across these assets. Using a conservative 4% withdrawal rate that gives you $40,000 to $80,000 per year, enough to cover your lifestyle without a traditional job. Follow this blueprint, stay consistent, and you'll be building wealth the smart way, just like the richest people do. So here's my question for you. Which asset will you start building first? Drop your answer in the comments. I want to see your plan. If you found this video valuable, make sure to hit like and subscribe so you don't miss more real-world wealth strategies. I've got a ton of content coming that shows exactly how to apply these assets in practical ways. Next up, check out my video, How to Build Your First $100,000 Using These 8 Assets. You won't want to miss it. It breaks down step by step how to get started, even if you're starting from zero. Remember this, the wealthy don't work for money. They make money work for them. Start today, take action on even one asset, and your future self will thank you. Your journey to financial freedom starts with the first step.